And today's topic is opening up a staffing agency, benefit and risk analysis. This is my whiteboard. This is where I am going to talk to you. So we are going to draw, we're going to write, we'll make a note. You don't have to worry about taking a picture of this right now. You just focus on listening. And later on, and if you want a picture of it, in case you didn't do while you're driving, and you can just email Catherine at communitycpa.com and she'll give you a copy of this whiteboard, this thing I drew here. And or you can do that when I finish talking with everything, right? So you can make a complete picture. And here you go. This is my email address. So you can have my email address. I also mentioned to you about Catherine's communitycpa.com. So now let's talk about staffing agency. So when you got approached by someone and wanting you to do a staffing agency, you, from the tax structure standpoint, you have choices. You can run it under your personal name as a sole proprietor. You can also run that as an LLC, and you can also run that as S Corp. You can also run your staffing agency as a C Corp. Okay, so you want to know that, well, when I just started and I want to spend the least money I could, and what is the best way to run a staffing agency? I will say that no matter what, this one you don't spend any money to set it up. So this is the cheapest one. But you want to set them up either on LLC, S Corp or C Corp because you want the entity protection. This is the subject the lawyers would talk to you about when you go to set up a company. They are considering your risk, the risk from business endeavor. And today, our risk is not from the legal standpoint. We are talking about money. So I am talking about risk of you losing more than what you're getting. Even though the cash is coming in, you got paid 70,000, 100,000. Oh, feels so good. It's like, wow, I can get a check of 100,000. I've never seen these kind of check before, but not knowing that your obligation is 120,000. And we want to talk about that risk. I want to teach you how to calculate that so you don't fall into these kind of trap. They know the game. They know the game better than you. And if you have never ever had a business, just suddenly inspired by having a business idea and, well, Ying, how could I not do it? Because I can find someone, I pay minimum wage for $10 and they pay me 20. You don't make it. I will calculate that for you. But I want you to foremost, set up a company for it. So not a sole proprietor, period. So that's not a choice. And you either have these three. Then now you ask me, okay, Ying, just in a very simple way, tell me what is the best one to do? I will tell you this. If you make net profit, given the fact that you know how to calculate net profit, right? Net profit is your total income, your big check, minus all your expenses. Then you have left over. If you have $25,000 more net, right, you will be under S Corp. And if you have $250,000 net profit, you stay on Core C Corp. Simple way to give you, there's a whole article I can write about why it is that. And I'm actually writing about my second book. It's called Appointment with Ying at 10 a.m. In that book, and I will write about things like this. So these are the threshold, not by somebody's textbook. I didn't read it anywhere. So our experience is truly the small businesses experience. So you want to go by what I suggested and think of what you're going to form. So you may say that, well, I don't even know what I'm going to make, but let's say I don't make a lot. So I would start with LLC. That's fine. You can start with LLC. So with LLC, you can always later on elect to be a S Corp. And you can also elect to be a C Corp, right? So you really have a way, you don't have to change your EIN number. You don't have to change your checking account, your banker, and you can stay the same, but you can move yourself from LLC to S Corp and from S Corp to C Corp, right? So this is where entity side, that's it. This knowledge itself takes an hour to explain, but today I want to save majority of our time on calculating the risk, calculating the dollars. So now I decided my staffing agency going to be a LLC. And I decided, and I am going to hire people here. I am going to rent people there. Basically, you're renting people out. Basically, that's why they give you this nice English staffing company. You are a staffing company. You are the one that renting people out. So people's salary is what? Is your cost of goods sold. Just like you are a restaurant and you use material, make them into dishes, you sell them. So your cost of goods sold is material, is vegetable. But in the staffing agency, people is your inventory. People is your cost of goods sold. People is what you're gonna make money out of, okay? So you are renting people out. So now you're gonna hire. The reason you got approached by whoever approaching you, telling you that, oh, do this, and I'm going to pay you. Those big company was telling you that we need people. So here have this big company. Told you that if you form a company, I pay $30 an hour on worker, and I don't care how you get them. I write it in there because that's what they say. That's what their contract says. They give you 20 pages contract. It's just these two sentences. Okay. So they give you a price. They say that they will pay you. And the minimum wage out there is $10. And they say, you know people, so you can literally pay people $10 an hour, but we pay you 30. Isn't that a good deal? Such a good deal. So you calculate, you say, oh, how many can you give? Yeah. How many do you need? How many people do you need? They say 100. They want 100 people. Constant means that they always want 100. So 100 people, if I use math, 100 people times 8 hours a day times 30. This is how much a day they will pay you. If they have 100 people from you, they work 8 hours and you get $24,000 a day. That's 8 hours, that equals to the day. That's 100 equals to people. And the 30, that's the unit price they give you a week. And you're thinking, I know what you're thinking. You're thinking, man, okay, my calculation. I'm going to get 100 people, 8 hours times 10. I'm so good. I know a lot of people. They can work for $10 an hour. They'll be so happy. I'll be good. So here, your cost, 8,000. 24,000 you got minus 8,000 equals to 16,000. This is what you are dreaming of, profit. You say to Ying that, in 1 week, I'm going to make 16,000. Of course, my profit gonna go over 25,000. No. I don't want LLC. Now I need to be S Corp to begin with. Good thinking. A lot of people, a lot of our small business people who just started business will fall into this selling. This is selling. They are selling. I literally can name those big companies. I'm so upset with them doing this, but what I can do is to educate the folks on the other side to make sure that you get a reasonable deal. Okay, so they're selling you a business, basically, and it looks like you're gonna make a lot of money. So now let's do reality check. So what really is the cost? So this is the part that this webinar is all about, to give you the reality. So I still want you to be in business with the staffing agency. I'm not saying that you don't, but when you do, I want you to do it calculatively, right? To know that you're gonna make it. You're truly, really gonna make it. The big company is truly, really trying to sustain small businesses out there, really is looking out for you, have you grow. I would love the world to be this way, but it's not very often. What I see many cases is our folks don't have a lot of very deep payroll related knowledge. They fall short and they are wondering, Ying, I don't understand. I'm literally getting 250,000 twice a month. Checks, big checks, huge checks. I don't understand why I don't make it. And now this come, I'm going to broke and I can't operate, have to close. You can close, but payroll liability is trust fund. Trust fund don't get going, don't get diminished by time. Trust fund follows you all the way to your grave until you sell every piece of your property to pay to the government. So what is trust fund? Let's understand that concept. Some taxes are trust fund, means they are the funds, trust fund, no ing. Trust fund, it is the money that you received on sales tax is trust fund. You received sales tax on behalf of Department of Revenue in that state. It's not your money. You're just being trusted to hold it and then submit it. If you don't file, you don't submit, you are charged with that money you owe to the government. It doesn't expire. It doesn't go away. It does go away if you die and you don't have anything. But if you die, you left your house, great. That trust fund can go there, get your house. This is trust fund, payroll taxes, Social Security, Medicare that you collected from your employees, the withholding that you collected from your employees. Those are the trust fund. I'm not talking about the Social Security, Medicare, that portion you contributed with your business. If your business go bankruptcy, and that portion of Social Security, Medicare can go in bankruptcy because that's a company payment to the employees. But if your employee give you their portion of their paycheck for you to submit to IRS and Social Security Administration and you didn't, that is trust fund violation that can go to jail. You will have to pay it no matter what. So we're talking about very serious offenses here if you don't do the agency right. So this is how you operate. So you are actually, let's say we run a payroll for the 100 people. So you paid, let's say the reality is that you can't get anybody at $10. And you know that. So even though when you bought in this business ideas, you were thinking of paying minimum wage. Nah, you can't. And people don't work minimum wage. Yeah, there may be people willing to work minimum wage, then they probably don't have Social Security number to give you. How are you gonna do payroll? You can't. So you're dealing with people who has work status already. If they don't have work status and you hire them, the risk is on you. And I'll explain to you what kind of risk. So now you have 100 people and you can't pay $10 an hour. In fact, they all have to be around $15. I am giving very real numbers, folks, because this is literally our cases with our client, okay? And so you're paying $15 an hour. So that gives you what? The $15 times 8 hours. I'm going to pull up my calculator because I know I'm going to use it. So give me a second. Sorry. You wish that I'm so good with calculating, right? Yeah. That's my secret. I don't know how to calculate it without a calculator. And so sometimes I say that I don't know how to write English without spelling check. So if you see mistakes on spelling on here, and it just, it's okay, it's yin. What else can you do? She's like that. You know, I always, I use my immigration status because I'm not born in the US and English is my second language. Man, I take advantage of that, right? So if it is too hard to answer, I just say I don't understand. I know you are laughing because that's just what I do. And I try not to do that, but I'm so used to really admit the shortage of my English and I got used to that. So $15 times 8 hours times 100 people, folks. What is that number? 12,000. So now you got 12,000, but payroll is not just for that, right? The payroll you have to add what? You have to add 941 taxes, right? 941 taxes is Social Security. CIAL. You can see that. Medicare. And what? Withholding. Both federal and state, right? So these two, and that reduces the total you give to the 12,000 because that's come out of the employee's check, right? So these are reduces that. But there is another set of Social Security and the Medicare. That is your set, right? So this part of your set, and you can simplify that. It's about 8%. It's 8 point some percent, just to simplify our calculation so I can end up giving you a real magic number, okay? You follow me. We say 10%. So you need to add 10% of 12,000. That gives you what? 1,200 to your paycheck because that's your match. What else you need to add, folks? Work comp, workers' compensation. And this one depends on what business you are in. Let's say you are in construction. And I have a video, you can check the title and just type in workers' compensation, then you will understand how that works. But let me give you the ratio. If you have people who works on the field, the bodily injury is possible, and then you want to budget for 20%. It is something around 3 to 18. For extreme cases, and they have 25%. So we just take 20%. 20% of whatever you pay to people. So what is that? Isn't that $2,400? Am I right? 20% of 12,000. So that's 2,400. So now, what else is in here? Unemployment insurance. This one is range from 3% to whatever percentage based on experience. I will just give an average of 20%. So now in here, if you are a construction company, I want you to budget for 20%. Okay. What else? Nothing else? You have general business liability. Maybe that is not tied to the payroll, but it is your company's overall. And then that general business liability, and I recommend you to do a small percentage on your payroll. So you're always carved out with that amount. It is a very small amount. And you can, based on that, to make it say 1%. Right? So these are your related. If you don't have health insurance, of course you don't have that, you don't add it. If you don't have 401k, you don't add it. If you don't have a paid time off, you don't add it. But if you do have paid time off, you need to add it because that's your cost. And how do you calculate that cost? You just use their rate times the time off you're gonna pay. So that amount you add into here. So you calculate everything accordingly. So now let's just look at our percentage. So we have what? 10%, 20%, 20%, 1%. Where am I now? 51%? Am I right? 51% total. That means when I have someone I pay $15, I need to up by 51% in order to know the real rate. So 51% added $7.65. So 15 plus $7.65, that gives me 22.65. So the money you make here, folks, because they were giving us $30, right? So now you are looking at 22.65. So that's your real cost for $15 of payroll, not $15. Okay. So now we got this number. When you have a to the company, you do, right? If you're running 100 people payroll, you think you're running it for free? No, you have admin people on it, do you? So let me ask you, how much you gonna pay a full-time accountant, run your payroll, do your admin, and your or you hire, they're gonna quit and come. For each person, for each one number, you probably gonna replace 3 times. So your real employee in the system running is going to be 400. Someone needs to handle that. So who is that someone? That is your assistant, or is your CPA, or is your lawyer, whoever that is. So how much do you budget for that? And you will be budgeting, say, for 70,000 a year, right? 70,000 is not a exaggerated number. So 70,000. So now you know your difference is right now, it is $7.35, right? This is your profit per hour. So if we hire someone at 70K to manage the mess, divided by 7.35 profit, so this person, when I divided this one, the $7.35 is the profit we gain on each hour for the worker to work. So you may have a total number of hours to put together. So if I use 7.35 divided by 70, I must create in my whole company in order to pay for this guy. That total hours is 9,523 hours. Because I was using the 7.35, I divided into the 7,000 because this is the total salary, right? We need 5 people, 5 worker working 2,080 hours a year to support 70K employee. Okay, but my calculation here is very tight because I assume nothing. I say 7.35 is going to be used for my admin support 100%. So I got 5 worker designated to 5 workers making their profit is all gonna designate it to my admin. And then the rest of the worker I have, it is the money I make for the company. And then the rest of the worker you make for the company, and then you want to budget one more thing I give you. Okay, one more thing. Because I already talked about the taxes, right? Then you know that is 51%. And whatever you got paid, you know what you have to pay for your people, and you think about some 51% of what you pay to your people, that is your payroll cost. That you can't run away, that you have to pay. Okay, so that leaves you whatever that is. So in my example, I am pretty generous with the gap between the big company give you versus what you are using. And I have seen my folks with only $4 in between. No way. $4 in between, you would lose money. I have one more big item to mention to you, and I want you to stay tuned and hear them. I'm using different pen and pencil to write about this additional cost because this one would cost you, if you experience that, would cost you all your profit and plus the attorney CPA fees. So we have a saying in the business that once they get audited, and all they're making for the past 10 years is returned to the government. That's not a joke. That's true. And this is how much of compliance you have here when you have a staffing agency. So people who come to audit you, we're talking about audit and compliance. And the staffing agency has a very high compliance audit. Let me list the agencies who would be interested to audit you. This is also why you're a big company boy and don't want them. They don't want to be audited. That's why they give the monkey to you. Okay, so let me tell you who are the auditors. Department of Labor. Department of Labor are the one making sure that you pay overtime on every second your people worked. And if you pay cash under the table, there's no proof. And you say that, well, I did pay him $20 an hour. He took $10 on cash. I just don't have any record. What I have on record is $10. That is useless. You still going to be charged with not paying overtime to that worker. Okay, it only takes the worker a call to Department of Labor, get you reported, then you are in trouble for the next 3 years. So Department of Labor, and I do not even agree with the kind of audit they do, but they do. I don't think the audit they do is fair in the cases I experienced. Business owner is already so hard at work. They don't really make anything here. And they, didn't have a document for lunch break for the worker. And then they charge with the time for the lunch break. And even for, if the business owner provided housing, that's not allowed to deduct their salary. There's just a bunch of rules that really ties people's hand to be nice. And as a business owner, I want you to be nice. I am nice, but you do not want to be nice and to violate any rules. That is not a way to go. So Department of Labor, if they say you owe your person $100 over time, and they charge you $200 because they have this thing called liquidated damage. What does that mean? I don't know. It is two weird terms put together, and whatever you owe to the employee, you double. And they give that all to the employee. What does that do? That encourages people to report their business owner. That's all. It's reality, okay, folks? And it is nothing good or bad. And I, of course, support their job, because if they don't do their job, there may be people are abusing other people, and they don't care about whether these employees are citizens or not, illegal and not illegal, and documented, not documented. They don't care. They thought Department of Labor just care there is a human body working there, regardless of their immigration status. So with that, you want to be really diligent. If you are having trouble, 100 people, then you start hiring people with no ID. These people with no ID has human right to call Department of Labor, tell Department of Labor that you pay them not enough. Look, I don't have any pay, but I work there. Here's video of me working. What you gonna do? You're saying that, oh, I paid under the table, and here's the $100 I paid him. And you may resolve a Department of Labor issue, then you open up IRS issue. There's no win. But there is a way to deal with that issue. And this is where you need a professional advice. You cannot just pretend it didn't exist in your business. Okay. Now, Department of Labor is one on the top because they are most active and their charges is most severe. We have business got charged for $1 million. owes 500,000 times 2 million. Okay, so it is not a thing I make up here to scare you. It is reality, and I don't, I actually, I have seen those audits done really well too. Really help the business owner. But I have also seen the auditors are just filled with hatred to small businesses. I have seen that auditor. And too unfortunate, I know that person, but I hope you don't end up with her, okay? But Department of Labor is the number one. Number two, workforce. If you're in Iowa, you know workforce, which is the state agency. And with other state, they call it different names, but they're all the same. They're the one will do audit on your people because they believe every 10 it should be employee. And what they do is when they find out you are not running the $100, the 100 people through payroll, you are actually doing 1099. Man, that's a big audit waiting to happen. That's a time bomb waiting to explode. Okay, so workforce will come and change all of your 1099 to W-2. Then what do you owe? You owe 51% of whatever the 1089 number is. Not a small number, folks. Okay, and so that is the second one. So what about IRS? The IRS can come to your payroll and telling you that your 941 amount is not paid, your dollars, and we are going to levy your account, and we're going to investigate whether you have 1089 that should be W-2. Or they found you are using the wrong ID. They go, we are going to send you a notice and have you resolve the W-2 ID number issue. These are all compliance, folks. They're coming to you. And with technology developed in the computer system, the government between Social Security Administration and IRS already start working together. Now, they know you're going through immigration process. So they know that before you got your Social Security number, you don't entitle to these things. So now when you do it this way, they reject you because the two government, immigration and IRS, finally connected the dots. So Social Security Administration and IRS finally connected the dot. So if you submit W-2, which is the number is not right, Social Security Administration reject your filing and then goes to IRS, go for investigation. So it's a risk, a big risk, okay? And what else? It's not done. There's more. Work comp audit. What is a workers' comp audit? That's annually, every year. And you're not the lucky one, is everyone is lucky one. So work comp audit is every year. So what they come to do is they look at your 100 people, they go, wow, that's a roofer. I'm supposed to charge you 25%. Oh, that is the accountant. Okay, 3%. And or they look at your 1099, they go, you should need to pay for the 1099 anyway. So they add all of them into there for you to pay. So work comp audit is to catch up on premium charges for you. That's a huge amount for you to pay. You can imagine that if it is 25% on your payroll, that's a lot of percent. You have a lot of money to pay, okay? So these are the audit you are getting into and our big company boy getting out of. What a deal, right? So if I give you a price tag on these ones, you can hardly make it if you don't mark up 100% and above, okay? So if you can find, the problem is that you got this fixed amount from this big company and you are thinking that, okay, $30, that's a lot. I'm really good. And you need to consider the job market. Right nowadays, the job market is not the same as in 2019. It's definitely not the same from 2019. And every job is increasing price. You just saw that UPS was paying their driver $40. And I'll tell you that's not true because I have UPS people and we know their work. They're paid like $15 an hour. So I think whoever putting their payroll um, online is just trying to steer the pot and then making all of you not happy with what you got because I got $40. Oh yes, I was kidding. So I haven't really seen any announcement out of UPS to see whether they have any comment to that the social media post. But a truck driver making $40 an hour, so that gives you an expectation, folks. You may be getting $30 from the big company, but people you hire, they want $40. And what you gonna do? So you really should not, in today's world, give them a fixed dollar amount. You need to tell your big company that my markup is 50%, 51% is my cost. So to make money, I need 100% markup. And whatever I pay, you just pay me 100%. So that way you're always winning. But of course, you're going to tell me that, Ying, if you tell me to negotiate like that, I will not have the business. Maybe you don't have the business. Why do you want a business that doesn't bring all these personal liabilities to you? These are trust fund, baby. You're not gonna get away from it. You have to pay. So with that, I will just say that this business need a good thinking. If you have questions related to this type of business, we are the expert. I have seen too many. We have seen from the IT workers all the way to construction workers. And we also have attorney here does immigration visa on work visa. So we understand how all of these visa works, how the H2 works, right? You can hire seasonal contractor to work for you. There's so many ways to do it right. But to help the big company and taking over their risk, and your fee has to be based on what you spent, because you can't even predict what happens in the next 6 months. We're going through recession. We're going through recession with all the employees have this ideal thinking that they're all bosses. Nobody wants to be employee. Nobody. That becoming a mentality, small business owners, you can innovate. You can thrive over that. There's a way to do it. And I'm not just giving you grim news so you are like, Ying, you just destroyed my future. No. And I'm just prevented a bad future for you by you understanding the risk related to this calculation. So I calculated a $30 fixed fee on a $15 job. And what kind of job pays 15? No job pays 15. They're all about 20. If I use $20 an hour, then I do 51%, then you suddenly don't have that much margin. If I use $20 times 1.51, 20 times 1.51, so that's 30.20. So if this one goes up to $20, you are losing money because your cost is 30.20. They are only paying you 30. You need to tell your business person, this is the risk you are taking from them to yourself. Give a price on this one before you move forward. And I'll tell you that if you are audited by Department of Labor, and I will tell you to budget for $5,000 to $10,000 fee. And then budget for all of the dollar they want times 2 to your workers. If you are audited by workforce, then budget for whatever workforce asks you to pay. They don't times 2, but they are still big dollars because whatever they say 1099, you need to time 51%. That's what you need to pay. IRS budget for $3,500 fee. And then whatever they want you to pay, you have to pay. And under IRS, there's so many possibilities to be audited. Notice on W-2, 1099 W-2, whether they are the right classification. And then in case your 941 bounces and your bounce fee and your bounce classification, your installation, all of these things you need to do. Work comp audit every year, budget for $400. So those are the cost, fees, not to talk about the penalties or the calculation from the government that you no way can convince them to be on your side, because they're the one coming in. They come in to fix problem. How could you not have problem? You must have. Otherwise, they come in for nothing. Doesn't sound right. Doesn't sound, that's what the government would do. They will be wasting their time. So they come for a reason. For every audit, there's a reason. Okay. So with that, I want to say we conclude today's talk.